Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So I am late again. Oh wait, where's my Spotify? That's why I put it on the other screen. But we got a Friday. It's probably going to be a pretty quiet Friday, so we got time to do whatever we want, I guess. I think that I just caught a little bit too much in my thoughts, and I am a little bit sick too, so that'll slow me down. All right, let's come over to the charts and just kind of see where we're at. Well, yesterday we did kind of have that brief excursion on the downside, but then it kind of turned into nothing. In the overnight action, we've kind of come up and then back down to it. So, there's a little bit of a reprieve, but there's we haven't come back too far, so I don't think that they would do it on a Friday necessarily. I don't know what would be the thing that would drive the flows, but the possibility is there. And or that next week we, Federal Reserve comes out, we're going to raise interest rates. Maybe. Probably not say that we will raise interest rates, but keep them the same. Sure. Okay. S&P 500 still just on a tear, man. Like that is a super clean trend. Oil also still kind of heading to the downside. Donald Trump speaking yesterday, really sending oil down. Gold and silver. Well, so man, what a day yesterday in gold and silver, because they were really hammered at one point. Am I not getting... Oh, okay, January 26th. I was like, is this something seems off about that? But that is the 24th. That is correct. Yesterday when we came in, gold and silver were kind of taking it on the nose, but they really reversed higher in a very significant way. Silver as well. Copper reversing there. Wonder if there's some good headlines in China. Well, the Japanese yen kind of looks strong for a little bit, but they're giving that up. But the dollar is a little bit weaker, so that's probably part of that. And then there's Bitcoin. Oh my. Bitcoin was extremely volatile yesterday, and the reason apparently is that the Donald Trump released his order on cryptos. It was not as bullish as I think the cryptocurrency community wanted, but you're seeing that thing that you see in crypto all the time. Like, it will pump on rumors of something happening, and then when that something doesn't happen the way that they want, they don't sell it and go, oh, we were wrong, and sell it. It just stays where it is. So, that's cryptocurrency. But it does kind of make me wonder what the next driver can be for cryptos. Yeah. All right. Well, I got the window open trying to keep the room cool again, but I feel cold. I want it to be warm. But then if it's warm, then I know that I sweat too much, so let's not do that. Let's see here. I spent a lot of day looking at Rust stuff and different GUI frameworks and everything, and I didn't really write a whole lot of code, but I came to the end of it, and it was like, oh, it's not that hard to do some of the things that I want to do. Even though there's a lot of problems with these frameworks and stuff, they are pretty powerful. And I know what it was. I was going to do something because I was kind of torn between different frameworks, but I was leaning towards Iced, and then I found out that the Kraken desktop uses Iced. So maybe we'll take a look at that platform at some point. Just keeping an eye on everything here. It really does seem like it is set to be a really slow Friday. Do we have, okay, we do have S&P Services PMI and then University of Michigan sentiment. So we do have some news that could move us later. So maybe we just need to wait it out, right? Oh, yeah, that's the other thing. Kraken gave the Silk Road guy $100,000 when he came out of prison. I do not understand why they like this guy so much. He basically created a criminal website. I don't get it. According to Bloomberg Intelligence, the majority of trading in U.S. stocks is now off exchange. So that's maybe not as much of a problem as people might think, because, well, actually, no, that doesn't quite make sense, because I was going to say, probably a lot of that is because of like dark pools and stuff like that, right? But my understanding is that things from dark pools tends to come back to the exchange anyways. But that would not work. Like if it was all from dark pools, the off exchange volume would not be able to exceed the on exchange volume, right? Which means that it has to be people that are trading on the dark pool and they aren't trading with a block trading firm. They are just trading with each other or other over-the-counter kind of deals. And then that does maybe perhaps, well, does it become an issue? See, Uzi's saying if you're investing, it isn't. I think you might be right. Like, you're investing, you get the price that you get, and you can set your price and everything, and you're getting your assets and you're fine. For people that want to analyze all of the flow, then it's kind of a problem, right? Yeah, you do get rebates in the dark pools for providing liquidity. One of the things that I think about, like, it just keeps coming back to me in my mind. I'll think, oh, this is just kind of a fantastical idea. Probably forget about it. But it just comes back to my mind over and over and over again. It's like, don't you want to have more retail people providing liquidity in the market? Like, yeah, most retail traders are unprofitable and most retail traders are noise, but that noise is a key part of having a market. And it seems to me that it would be beneficial for retail traders to perform better so that we would have more liquidity. And how could you do that? Well, I think that one of the big things I see is that the kind of short-term trading, which is where I think that humans would really provide the most value over robots, is, really relied on market making to supplement it. And if the robots dominate the market making that much, then the humans just don't stand a chance, right? So why not handicap it? If you are a retail trader and your account is under a certain amount, you go to the beginning of the queue. Like, you get an advantage in the queue, for instance. Just like, provide them incentives to do it. That might be true that we don't provide liquidity, we overwhelmingly take it. Well, to the point that, like, if it are we using limit orders or market orders? Yeah, we over retail traders are overwhelmingly market orders. Yes. Those trades are still reported to the exchange. Yeah, well, and back to what I was saying earlier, that like when it's block trading, like the real like intent behind a dark pool is you're a big institution, you want to trade a certain amount, then on the other side there's a block trading firm and they're providing liquidity, and you match up with each other. Okay, transaction happens. Typically what happens is the block trading firm turns around and gets rid of the position on the open market, and their whole deal is that they're able to execute it on the open market and reduce their impact so that they still make money on the transaction, right? But if it seems that what's going on is more than that a lot of money is trading hands, and it doesn't make it back to the main market in any way whatsoever. And it's a little interesting as well when you come and you look at this chart that they've got here, how it has very much, well, okay, around 2008, it was when it really first shifted. But then, it kind of seems like in recent years it's maybe accelerated. So what is causing that? Why is it that they're able to get better deals off of the exchange? I also wonder if this is related in any way to the concentration in the stock market. I really do worry. Like, I don't necessarily see the economy going into a recession right now. I think that there are kind of some warning signs in the economy. It could shift into a recession really, really quickly. Wouldn't take a whole lot. Like, this is part of why I'm a little bit weary about this interest rate thing. Like, okay, during the Biden administration, they gave them the benefit of the doubt. They didn't raise interest rates, and everything that we have now in retrospect says that the reserve policy being delayed was really the key culprit behind why it got so bad. Like, the other components contributed, yes, a third, but by that point, those things had already subsided. They kind of started it, those things had already subsided, but the reason why it got so bad was because the Federal Reserve didn't raise interest rates back up quickly enough. Then now they're being super, super hawkish, right? And I'm like, I'm not so sure that the economy can handle that. Like, if interest rates stay where they are for a year, I think there are some industries that are just going to go. Like, I think there's real damage being done. And it just, the whole thing kind of looks fragile, So it's like, yeah, growth looks pretty good right now. I feel like it could shift really quickly. And I look at things like there's an unusual concentration in the market. We seem very overvalued by traditional value measurements as something that's kind of indicative of, if it shifts, it could shift very quickly. Got to come in and turn this on. Even though I think that I have an issue in my logic that makes it not want to take trades when it's live for some reason. We're also overwhelming FOMO losers with Lambo dreams, legions of unsophisticated investors essentially buying scratch-offs. There's this other thing, which is like, okay, retail traders tend not to make money. Why is that? Is it because they have ideas about the way that things work that just aren't going to work? I kind of believe that to some extent. But then also, is it because most of the people that are doing it just really have absolutely no clue what they're doing? That's probably also a thing. I think the stuff that I talk about and I worry or complain about, I guess I could say, in the retail trading community are really only for the people that have been trading for a while. And then even the people that have been trading for a while and should know what they're doing still fail. Why? Well, because they have some ideas about the market that are incorrect. But then maybe it's just that they are at such a competitive disadvantage that it's just never going to work for them. I don't know. Then I go to some of these other things because, you know, I think at one point the thing that I cared most about was how can we help retail traders trade better, right? I think that kind of shifted to like, I really only care about you guys, right? Like if you're here, you're coming to the stream every day, you understand the stuff that we're talking about. Can we utilize that information to get better at trading? Well, it seems to me very, very clear that the information that we have will help you more than basically anything else out there. But I cannot say with confidence that like it really puts you at the advantage and that if you stick to it, you'll be profitable, right? I still think that probably 50% of people with that information or more will lose. And that's why I kind of also shifted to like, the more that I understood it, the more that I realized that like, we probably shouldn't be the primary audience for this content. This is really content that like, we would like everybody to know about. There are stylized behaviors at the highest levels that can result from chaotic systems. And so it's very, very difficult to come into a field and, you know, look at what's going on and actually understand what's going on. You have to use different tools to be able to see those behaviors, which is where we get into like agent-based networks and some of these studies and so forth. And then once we do those studies, we get to understand the system. And I think that our understanding of the system suggests that probably there should be some changes to it. I try to avoid like really forming a strong opinion about how those systems should be changed. But I've discovered that if you are just like, hey, the system is super bad, now we need to change it, that doesn't work, right? Like it kind of has to be, it kind of has to be a movement that kind of sneaks up on you from an organizational level, where it's like, we've taught so many people these things, they're following it, they understand it, they get into organizations that like Congress, they have the ability to kind of shift these things, and then you get to a point where everybody agrees like, oh, we should change this, and then change can happen really quickly, right? So we need more people to understand this, and that's really hard because people don't want to understand this stuff. Like, it's complicated and it kind of contradicts a lot of the things that people want to believe, you know? So how do you get them interested in it? It's super, super hard. Well, we do have, and this, the other thing is that we do have this one kind of lure, which is like, you can make money from trading the market. It's just that I don't know if this information necessarily gives you automatically gives you an advantage to make money from the market, you know? So what do you do with it? I don't know. I guess what I have to do with it is get myself back into a spot where I can take risks and take really, really big risks, and then tell people, the reason that I made all of the money was because of what I know about market microstructure, and not, you know, the risk taking. Information worth a crap doesn't come cheap. We're basically relegated to lose less when you lose than you make when you, yeah. I was gonna say, like, I think the thing is like, okay, information that's really truly valuable, I think you're right. Like, it's not free. And okay, so I'm making a video about You know what? Sorry, the camera's a little bit off center. I don't know. The next video that I was writing up, I have one that already recorded and we're editing, but then the next one after that is how much money do you need to day trade? You know. And so I was going through it and I was like, well, you know, if you're just starting out, one of the things that you have to factor into your analysis is the startup costs. Like, hey, do you need to pay for a software package, all of those things? I don't think that we here on this stream really think about that stuff because we already paid for those things and it's not really a factor for us anymore. But like trading futures is expensive, man. It's expensive. It's expensive. And man, yeah. A Bloomberg terminal north of $20,000 a month. I don't think that people pay for that just to look cool. Yeah. So it's like really good information. There really are high costs involved in it, right? But then there's another side of it, which is that there is very valuable information that, you know, is not factored into the current price that like everywhere. Like literally everywhere. And the problem is like there's so much of it and the market is so inefficient that just taking that piece of information and trading on it doesn't necessarily guarantee that you're going to make money, you know? It really is a strange conundrum. Like if I'm going to take my pick, you have inefficiencies that are super big and there's huge profit potential in them, but it tends to be inconsistent and take a long time for the market to come your way if you're right. Or inefficiencies that are super teeny, but they're extremely consistent. You make money pretty much every day on it. It's just they're really competitive and they're hard for retail traders to grab, right? I really think that it's I would rather have those small, really consistent ones. That's kind of what I think, or what I would like rather, but they're hard to get. They're harder to get. It seems like that as a retail trader, you stand a better chance on the informational inefficiency side. And the thing that I think I'm struggling with now is I'm starting to realize that there is another consequence of what we've learned that I haven't really considered and thought a lot about, which is that the risk-taking aspect of it really becomes significant. Like if you're going to make money off of those informational inefficiencies, you have to take big risks. Roy Sale says, where do you see buy-side liquidity on ES? So when you say that, I'm gonna give an answer based on my understanding of those terms, but I kind of think that you're probably asking me a question that's not, like, you probably have a different understanding of what those terms mean. So, I mean, when we say buy side to me is like, I'm an index fund or a mutual fund or whatever, and I can buy something, right? That to me is buy side. And liquidity is not people putting limit orders up on the exchange, right? So I think that you're expecting me to use the past price history to identify some area on the chart that there should be more liquidity and therefore create some sort of a support on the chart, right? I think you're asking me to do an ICT analysis to pull this up. Where is the S&P 500? Well, this one is so noisy here. I don't know if that really helps, but you know, I think that you're expecting me to go, okay, there's this recent low down here. So if we come down below this, there's going to be a liquidity grab, and then we can just go up all day, right? I think that's what you're expecting me to say. But when we look at like where does liquidity actually tend to lie, like where can we predict that it's going to be? Well, there is going to be some liquidity down below this most recent. Well, let's see here. So here's 7 o'clock. Here's 5:15. Okay, and then we were last there about 15 minutes ago. So there is going to be a little bit of liquidity here, right? Everything before that is kind of irrelevant. Everything before that is kind of irrelevant. So you have a situation where market is likely to stay contained between here, right? All other things being equal. But we're going to have an open in 25 minutes. So probably we kind of skittle along, do random who knows what, and then we'll have the open. Now, it's a Friday, so some of Fridays you will see like profit taking, I guess you could say. So that's maybe a little bit of a self-flow. But although I don't really have very good data on that part, unfortunately, that's something that I've really been trying to find the research on and just haven't found it. But then you also have a PMI, or not a P. Is it a PMI? Yeah, you have the S&P Services PMI and manufacturing PMI. That's a little bit like it's not as forward looking as like the who is it? Market? I can't remember. They'll do it next week. The other guys, they're more forward looking, but it is a number that the market pays attention to, and especially on a day like today when like that's the only thing that they got going on. And then there's University of Michigan sentiment final, right? So this is the first thing, is that in this situation, if you're looking to like be tactical about where do I buy or sell, timing is significant, and we can kind of game out a little bit what would be optimal timing based on the stuff that's coming up, right? So I don't know if it's, I mean, I think that if you're looking for a trade right now, it probably would be better to do it right now, right? Like to buy right now. There has been some acceleration. So especially if we were as lucky as for it to come back here, maybe that would be the spot to buy if you really think that it's a buy. I don't really have a whole lot of information to say that it is a buy or not, but let's just assume that it is, right? This would be a good spot because we pushed through this so quickly. And now would be good timing to like get it on the hopes that the open ends up being a buy event, right? And it pushes us up further. There you go, right? So that's like the information, all of the information that we have now that I think would be useful for you to take a trade, right? Where would you see a target for the upside? Well, it's not a circle jerk of an answer though, right? I mean, it is kind of saying we don't really have very good information for a trade in ES right now, unfortunately. If I were to take it on the other side and on the treasuries, because I know that the ES is going to move. I mean, like it's a volatile instrument. Like there's a certain amount of movement no matter what, right? Over in ZN, I would not trade this. I would not recommend putting orders in ZN right now. I would wait to see if they do something off of the PMI and the consumer sentiment, and you might get like a brief move, and then it's probably going to die down again. I don't think that we're going to see a lot of action in the treasuries. If the treasuries start selling and like we bust through those downsides and this ends up being like a huge trend, then because there is a possibility of that. We are pretty close to a kind of like a key momentum level. I think that I should eat my hat or whatever, right? Because I really strongly think that it's going to be a quiet day in the treasuries. Yeah. Okay, so your resting orders indicator can tell a market tends to move which side, buy limit or sell limit. Well, okay, so the way that I would use this, let me come back. I don't know if I was showing you the chart the whole time. I don't know. Oh, you know what though? He was asking about upside targets. Well, I do see one key kind of spot at 61.51. But by the way, am I using the recession template on this? I am. Okay. So I find that really high liquidity instruments that the inventory cost basis works better. Oh, you mentioned the resting orders can tell the market tends to move which side. That's more complicated, actually. I thought you were asking about, let me talk about what I thought you were asking anyways, which is, okay, the inventory cost basis. So the inventory cost basis kind of says, here's the buyer's average position, here's the seller's average position. We are below the seller's average position. So that does suggest that the market orders are to the downside, and you can see that that is true. That we are overall net sell on the session by about 15,000 contracts, which is pretty mild for, like, 6 hours worth of time, right? If the market maker is in charge, then probably what's most likely to happen here is that we will see the inventory cost or the inventory for buyers increase, and then eventually the market will just kind of inexplicably come back up to here, and then they'll offload the volume, right? So we are in a situation where the market maker is in charge and something like that could happen, but we're not really seeing them picking up buy side inventory. Okay, we're not seeing them pick up buy side inventory. If we start to see them pick up buy side inventory, that might be that might be a sign that that's going to happen. But we have news in 30 minutes, right? So it could be that they're front running the news, and that's probably more likely that they're front running the news. All right. And maybe this selling is front running the news, so maybe we're likely to just continue to do that. That's probably what's most likely to happen in the treasuries. But again, it's going to be super slow, so I would not recommend touching it. Okay. Coming back over to here, the resting orders. So here I have resting orders added onto a chart, right? And the issue with the resting orders indicator is this. And here's the way that I would use it. So there's the resting orders and there's the resting orders filtered. Okay. Resting orders, by and large, the market will move against the direction that is showing the most volume. So basically what this is saying, because it's positive, is that there are more limit offers than there are limit bids. Okay. That's basically what it's saying. It's like, if you look at this number here on the DOM, like where it adds them all together, 33,000 versus, and it's actually 38,000 over here. Oh, 87,000 on the inside. Oh, 83. 83 versus 86. Okay. This one, I don't have it filtered. So it's actually showing everything. So there's some like really big ones up here somewhere that's showing more. Okay. But by and large, if there's more offers, then we tend to be going down. You will probably see that reflected in just the trend anyways. So does that really help you? When you see shifts, when this flips, that's kind of like a sign, right? Like, if I really see this book flip, then that really means that the market makers are really confident that the trend has changed, right? But if you use the resting orders filtered and you filter it down to like maybe the first 10 levels or something like that, then you will kind of get this thing where you can kind of see where the robot stacking and pulling kind of changes. And that can mark significant shifts in the market. So right now it's a little bit too iffy. But if we had this situation where like it was coming at 200 and then all of a sudden it crosses over, I should expect a change in the market. Okay, so that's how I would use that. That's what we've noticed with it. With the caveat here that I did not create these indicators necessarily with any specific strategy in mind, except for the market order imbalance. So these are really there for you to collect the data and then do your own kind of data science and find if there are situations where you can find good signals in the order flow. Okay. Okay, so what are you guys talking about here with the DOM? The DOM only shows limit orders, not executed orders. For me, I don't need to see the resting orders that may or may execute. I'd rather see where the orders actually did execute. Okay, so let's talk about that. This is where I think that there's a really major misconception about how DOM rating works, okay? What the actual resting liquidity is not really too important. In all honesty, I would not look at this as like there's a big order over here and that means that we're going to go towards it. And that's what a lot of people do with those Vista charts. That does not work. The market will kind of shift and go between these regimes where it will move towards liquidity and regimes where it will move away from liquidity. Okay. Can you sort out what those regimes are? Maybe we can. Maybe I just need to think about it a little bit harder and kind of think about what could be going on right now that would make them want to move towards liquidity versus away from liquidity. I don't know. But don't look at there's a big order there and we're gonna do that, okay? But that does not mean that the resting liquidity is irrelevant. And for two reasons. One is that we're looking for relatively significant changes in here, right? Like if all of a sudden 1,000 pulled off of 08, that would be awfully unusual. If the that big order there at 08 and it pulled off, that would kind of be like, what's going? That couldn't be a potential signal. So they did a study recently where basically they filter things. They look at all of the major changes. So they use a filter to say like it has to be a change of more than 500 contracts on the bids or the offers, right? And then they turn that information into a token that can be passed into an LLM. And when they do that, they find that the market will kind of shift between different major modes and that it can provide very, very short-term predictive signals, but they're extremely effective predictive signals, okay? So that is, you can kind of watch the little changes to make predictions to some degree, right? But then the other side of it is that really what you want to know is what is the latent liquidity, right? So if I tick up, probably like, so if for instance, we start to see 11.5 stack up, 12 starts to pull, we trade through it, almost immediately, you're probably going to see some of the contracts at 12.5 cancel. Oh, that's weird because as soon as I said that, about 400 contracts at 12.5 canceled. And not in the situation that I thought it should. So there's something weird going on there. That's something that we should keep. I can link that study. Dude, John Philippe is doing so many so many studies, because this study is fairly recent to us and he's already got like 8 more. Disentangling the joint dynamics of prices and order flow. You can read that. Okay. Anyways, so I'm going to see a certain amount cancel, right? And it may actually, sometimes the way that this plays out is that like almost everything cancels. And like in the end, there's only like 1,500 contracts that actually stay and wait to get filled at 12.5 on at least the initial push there, right? But then what will tend to happen is like they'll push through, there won't be any more pushing at 13, and it will tick back down, and they'll put a little bit more liquidity there, right? And then they'll trade that, and they'll put a little bit more liquidity there, and they'll trade that, right? And it will kind of do that slowly over time, right? So what I want to see is how much was resting versus how much actually trades. And how much on average does it take to trade through a price? Right now, it seems like it's taking about 2,000 contracts to really do a big tick. Oh, okay, that time they did it on 500 contracts at 11. So there's the liquidity providers aren't really holding 11 for some reason. Oh, well, not for some reason. It seems like that the range is kind of like here. And so all through here, it's actually relatively easy for them to move through, right? When I see a change in that, that's a big sign to me, right? That's the sort of thing that I'm looking for. That's what tells me like what actually is the latent liquidity. So, and in particular, what is the latent liquidity in comparison to what the resting liquidity was? Okay, these are things that you can only see with the DOM. And really only see with the Jigsaw DOM. Like you have to be able to, you have to have something that says, you know, here's how many market orders traded at that price, and that like it will reset after it's, you know, been away from that price for a while, so that you can see each time how much does it take to trade through that, right? Right now you can see at 10.5, they're not really holding much liquidity at all on either side actually. Let's see. So 997 to trade up. That's pretty like meh. Okay. And they're not, the bid isn't getting more than 500 at a time. That's kind of indicative of market makers aren't really that interested in providing liquidity at these locations. It's just kind of stuck in a rut. Right? Do you think that using a co-located server would give enough queue improvements to justify the cost? So if you have a working strategy that is either providing liquidity or it is, you know, like really hitting into liquidity for like really short, fast trades, and it's a working strategy, you know, then absolutely the co-located server is you know, because that's going to be like a key element for it to work. And the co-located servers, they're not going to get you ahead of necessarily the HFT firms, but can get you to a spot where, you know, a strategy that wouldn't work if you're at the back of the queue, it does work if you're over there. Okay, so if you're in that field, co-located server is something that you could look at, but you know, I wouldn't be looking at doing it until you really have a really solid, well-tested system. Okay. What is the open flip chart in Jigsaw Auction Vista? Yeah, okay, so the open flip chart is actually a very similar data series to my resting orders filtered. Basically, what it's saying is, was there orders that stacked or pulled? It's kind of, you know, now there's that column that shows you like the net change, like when we tick down, and you'll see like, oh, there was X pulled off of here, X pulled off of here, and you get that whole thing, right? That's basically what the flip does. You can only get from a DOM that's not helping your trading. Well, like I said, we have some studies that suggest that there is some useful predictive informational content that you can glean from that stuff. And I linked that study above. Price reacts off of high volume area is significantly higher than 50%. The unknown. Can you prove that? I don't know if you can that's proven that the price will quote unquote react to high volume areas. I mean, the larger thing here is that, I think kind of the problem that you get with order flow, I guess you could say, is that the most dominant thing is the market orders. And you can get market orders that come in and just absolutely plow through everything else. And that's all that matters, right? So ultimately, you know, getting like the lay of the land, it's just like in golfing, you know, like you're putting and you kind of look at how the ground kind of curves to kind of judge which direction you want to hit the ball to try and get in when you're putting, right? So that's kind of like reading the liquidity, the resting and the latent liquidity. So because that can kind of show you some locations where it might be easier for it to move through one place more than another. Like right now, it will probably be easier for them to plow through liquidity to get back up to 11.5. But the market orders are selling right now, so you will see this little push right here. It could be a part of a larger meta order, but my guess is that it's related to the time. Like I don't know if that's going to continue after the S&P 500 open, but let's see what happens. I'm not anticipating any large flows. That's already a flow larger than I was expecting today, so that might be a sign that actually we're wrong about it being really, really tight and that there is somebody that really wants to sell today. Okay, but so getting the lay of the land is useful, but it's not as useful as having a really good predictor of order flow that's going to suggest that the market orders are going to come in one direction or not. Yep. I probably should do more work with that study. So I was reading a Reddit thread. I might, you know, I'm trying to talk to this guy a little bit more, but there was this Reddit thread the other day. There was somebody, not the other day, last night, where the guy was like, I came from an institutional trading desk. Ask me anything, sort of thing. I was like, oh, really? Because usually it's quite unusual that you see somebody come from those desks and talks about it publicly. Doesn't happen very often. It kind of seems like that this guy, he came in, it kind of happened like what happened to me. Is like you come out of the industry and you start talking to the retail traders, and it's like everybody seems to be so clueless that you really just want to kind of like level people up just so that you have somebody to talk to, you know. I think maybe that's what he's going through. But he was saying that he has a strategy that he runs on futures that is based almost entirely on a recurrent neural network. I was like, yeah, you know, like I have all of these things and like I'm kind of doing the data, but we kind of need to get on like actually using the data and passing it into these machine learning stuff. So like maybe soon. I've been thinking, let's make a new platform, right? But maybe the right choice right now is actually to spend more time on the machine learning. I rarely see price blast through a previous high volume area. Oh man, you haven't been watching treasuries long enough then, my friend. ZN does look heavy. I mean, so there's like one of these things that I think that really kind of trick people is that, again, like there's a high volume area at 11.5. Okay. What causes that? Right. And everybody has this idea that it's like, well, that must mean that people are interested in trading it. So like if we get back there, then people should be interested in trading it again, right? But that's not what happens. What actually happens is it becomes an area of low resting liquidity. It stays there for a really long time, and it going back and forth there for so long ends up creating that high volume node. So what that suggests is that there, at the time, was low latent liquidity at 11.5. And those are locations that we kind of will get sucked into. But after about 45 minutes, they will fill in, and then they're not relevant anymore, right? So we were just at that spot, like not even 5 minutes ago. So if we had an impulse buy, like really good chance that we were going to just come back in there. And it would really take a strong impulse for them to push through it, right? But after 45 minutes, like it's just not relevant anymore. So like we've been down there and then we come back to it. You know, if what's relevant is like if there's a really big buy or a really big sell. So like in this example, what we've got in the market right now, you might be thinking, oh, like there was good volume down in here before, right? Maybe that will be a place of support or something like that, right? But like we're getting a pretty strong, getting a pretty strong sell order coming through. I wonder if somebody is making a bet on the PMIs here. But like, you know, let's just see. I can't really know. I'm not gonna play that one, but yeah, I don't trade the treasuries, never have, never will, but the fact that you do probably speaks to why you like the DOM. Well, yeah, I honestly, I really question how much usefulness the DOM has on the S&P 500. like all of the dynamics and so forth that are, I mean, like the things that we see in the treasuries, okay? Like there's research that explains why we see those behaviors. Everything that I just explained to you doesn't come from, oh, I've just watched the market, this is my tendency. It's me reading the research and then kind of relating it to the things that you're watching as a retail trader. So anywhere that we have a limit order book, because that's really what causes these behaviors. Anywhere that we have a limit order book, we should see them. And that includes the S&P 500 futures. It's just that the S&P 500 futures also has an index, and there's all of the order flow in the individual stocks, and then a lot of order flow is the hedging. So there's like too many factors for me to consider and factor in to really make good predictions off of that. And I honestly believe that the S&P 500 is mostly dominated by randomness. The only kind of like market making, high frequency trading strategy specific to the S&P 500 that we, you know there are firms out there using to some extent, etc., that I'm aware of is strategies that are comparing the price of the futures to the price of the index and or the individual components. Doing some sort of analysis of the individual components and saying, oh, this is where the S&P 500 is going to be headed. So, and maybe it's like that because most of the movement over there really is just Gaussian movement. And in that kind of a world, the play is not, I think that we have this idea, okay, so you know, we have some range and it's trading in the range, and then you say, okay, I'm gonna buy it right here, I'm gonna take a target right here, and I'm going to have some stop like way outside of the range or something like that, right? And the issue with that kind of comes into that, like when you come in here, it's actually Gaussian and random too. So if that is the case, then the strategy is sell volatility, not trade futures, right? And maybe that is why there's so much in options, you know? Okay, do you glean any useful information from market internal charts? So I don't have that data anymore, but there was a time where we had that data, and we did a little bit of research taking some of those, particularly the tick. And because the tick is actually the really, really interesting thing about tick is that when you watch tick, it really is just a noisy chart, right? But if you apply the right filtering techniques on top of it, you get some really good, clean patterns in it. You really do. And so we created some robots and everything to kind of test that. And what we found was that there was something to it, but that it was probably like it was break even, essentially. Like the market had already taken it out. Oh, okay. What do you think is a better calculation at price or diagonal? I honestly don't put any stock in those kinds of things. That originated from so what he's talking about is that when you have a footprint chart, or frankly, you can do it here on the DOM and you say like, okay, there was this many contracts on this side and this many contracts on this side, and there's like way more on this side than this side, so that's some sort of an imbalance that should be able to tell me whether we should move up or down, right? And then there's this whole question of, okay, but should I be doing that comparison across like this or like this, right? And I think that the answer is that these people that are buying or selling and are creating these moves are pretty price agnostic. So I would not look at it from the perspective of, you know, how much transacted at this price versus this price. I would look at it as the overall imbalance in the volume over a certain time period. In other words, I would look at like cumulative delta and market order imbalance and so forth like that for that kind of a signal, and not just a, you know, an imbalance at one specific price. Doesn't have enough predictive power in it to really be useful from what I've seen. And or we don't have any kind of research or evidence to suggest that it would. So far, the treasuries have been heavy, but it's kind of stuck around that 10 where we initially saw the like, it kind of looks like the market makers are kind of being flighty here. The market, it doesn't do it diagonal or across, because diagonal or across is basically comparing this price to this price. It doesn't compare this price to this price. It signs the orders. It says, is this order a buy or a sell? And then it's all of them over the whole period, right? So if this market was going like this and all the way across this range, but then you could say, throughout all this range, was there more market buying or more market selling? And then my indicator will show that to you. And if there's more market buying, that might be a good reason to buy it and expect that it's going to do that, right? But I think that you're going to see that across the board with the work that I've done. The thing that I always see is that like specific prices don't matter. So your claim of a high influx of market orders can blast through a previous high volume area. Would that also blow out the DOM, making it less helpful as well? So if I'm like seeing some sort of a thing like over here they were kind of holding it and all of those sorts of things, and yeah, those things stop mattering. And what you will see instead is you will see the market makers like seeing the strong flow come in and like get out of the way. Like you will see the liquidity react to it. So you will still see it on the DOM, but yes, like past patterns and or location, like that's really, but this is still kind of in line with the thing that I'm saying is like, don't pay attention to specific prices. You know, the only thing that I really have that relates to a specific price is if we have formed a liquidity hole in an area, there will continue to be a hole in that area for about 45 minutes. Okay, everything else is kind of is irrelevant. And if we are in a hole and you get a huge impulse, yeah, they're going to blow through it. It's just that the people executing these large orders, they kind of create these holes on purpose to help them execute. So it's pretty rare to see that happen. You're only going to see that happen because like news, right? Then you should be hearing it over the news squawk, and then you can say, right? Then you can say, there's going to be all these people that think that this should be resistance because they don't know what the news is, and it's just going to blow right through them, right? Those could be great trades, right? How many market makers are active at the same time? Well, hundreds, if not thousands. Although in most of the futures instruments on the CME exchange are dominated by 3 or 4 market makers. Okay, I'm still kind of getting some signs of like the low latent liquidity, and we have formed a new point of control at 09.5. This does look like a dynamic that could hold until the news. Probably switch this over to this. I still have that on the archive.org page. Putin is speaking. I don't remember the exact number, but in treasuries, I believe it's less than a dozen. Apparently, ICT is a real fraud. Do you know that he was like prosecuted for fraud? Yeah. This is one that like I don't understand why people don't talk about that one, but he was, you know, he was selling a program that was like Forex and all of that sort of stuff. And he was telling people to take out a student loan, and then instead of using the student loan on school, to trade the student loan. And he got prosecuted for student loan fraud for that. So maybe that's what you're talking about. Oh, he shows a withdrawal from an AMP account, and he's like, so yeah. so if you go to Baby Pips, there's this Forex website called Baby Pips, and because he's been around for a long time, like he didn't become famous until after 2020. Right? But going back almost 8 years before that, he was like a known guy in the Forex community. And the Forex community was like so utterly fed up with him. Like that was kind of the thing, is that like he kind of moved away from the Forex community to try and find new suckers. And he found them. He found them essentially, and people didn't go back and look at the previous stuff. Baby Pips has a thread not a thread, but like somebody made a website that's linked to at Baby Pips that it will literally take you like all afternoon to read. It will literally take you all afternoon to read. And the whole thread is just like every time that he posted something on Twitter that was a faked screenshot, and they're able to show that it was a faked screenshot, and all of these things. Like it's just absolutely crazy how long it goes on. And that anybody was ever fooled by this guy, because there was plenty of information out there about him when he became famous. But okay, so here comes the news here in about 5 seconds. The liquidity is pulling. You think it's going to be a sell? No, it's up. It's a buy. Okay, so here you can kind of see that again, it went through that area of low latent liquidity pretty quickly, paused for a second, but there's a strong impulse coming in, so they are able to blow through it. It's going to be a little bit harder to push from here, but as long as they have the market orders to do it, they're going to do so. What was the number? Services 52.8 versus 56.5. Oh, so that's a very significant drop in services. And manufacturing is actually better than expected at 50.1 versus 49.8. But that still is just barely, 50% is the line between expansion and contraction. So like manufacturing isn't really growing. So that is a significant shift. And that is pretty bullish. The concern has been, inflation will come back. But all of the data that we've had so far says like, no, it's not. And in fact, maybe some of this data is kind of hinting at like deflationary things. So yeah, that's definitely a boost. How high can we get? Well, 13.5 is right there at the cost basis. So that's one spot that they might have a hard time with. I guess the question is, will we get just the one impulse, or will we get like a larger meta order? And in this situation, I think that we're just going to get the one impulse. Yeah, and in fact, I think there's a good chance. So we could watch these spots right here, because there's probably still some, market maker positions issues with those spots. But in terms of like how far back it pulls back. But because we've got consumer sentiment, University of Michigan sentiment in 15 minutes, are probably not going to get like a persistent meta order yet. Probably there was that one impulse that they're going to rest. We get the Michigan sentiment, and then we can make another call. But it is possibly a good opportunity, because the volume pretty much all morning was pointing towards the sell, right? And this is a shift. And that's the sort of thing that will create these monster trends, right? Okay, so there's the 12. You see what it's like almost magics. It's so, it's so funny the way that these things pull out, because I can sit here and I can say that like there's low latent liquidity and we'll get drawn toward that. It seems like that should be an easy trade, but then when I trade it, it doesn't quite work out like that. But these behaviors really are real, and you can see them very clearly in the action. It's just taking advantage of them without right trades is really hard. That's all. I'm noticing, by the way, still seeing some kind of weird stuff on the offers, where like that 13.5 wasn't thickening up all the way at first. Oh, that's funny. You said I flip a coin and say higher. Yeah, it was a higher.
Block sell.
I was saying sell because I was wondering if the sell meta order that we were seeing was trying to front run the news, right? Well, it could have been, but if it was, they were wrong. But you know what else I'm seeing is that it's not stopping the sell. It's not stopping the sell. Look, yeah, there was a good impulse and everything, but like the market makers actually held their offers fairly strong, and it's coming all the way back, and the change in cumulative delta is not anything. So I'm still like I really don't want to take a trade like just before consumer sentiment, but something's going on here, and it does make me wonder if, you know, you've got a really big sell order that's strong enough to hold in the face of whatever kind of news that we're having. Probably, you know, when I was giving all of the examples, I was talking about it like moving up, and really we should be talking about it moving down, because right now the market orders are pointing down. Yeah, they definitely ate it. R/trading, does Warren Buffett prove investing long term beats trading? I think that I'm maybe just saying this to be contradictory, but I think that long term does beat trading, but I don't necessarily think that Warren Buffett proves that. In fact, I'll go a little bit further. A lot of people are talking about, like, you know, the market is historically overvalued when you look at the Buffett indicator, right? You've seen people talking about that. Well, I kind of question how valuable the Buffett indicator actually is. I think that, you know, valuations are great, but like I wouldn't expect valuations of the past to necessarily hold, because it's the orders that move the markets, not necessarily the valuations. And that indicator has kind of been overvalued for a while, and Warren Buffett has kind of been underperforming for a while, right? So I wouldn't necessarily just say, oh, everything about Warren Buffett and his thing is like the way that it should be done. But like from a broader picture, you know, volatility is the amount of money that's up for grabs. And the shorter term your trading is, the smaller a portion of that volatility you're able to take advantage of. So it's unreasonable to expect that you're going to make more money from trading than from long-term trading. In theory, it's possible, because like there's all this constant back and forth, and you should be able to catch all of those. But the issue is that you just don't. You just don't. And so really, I think that the purpose of short-term trading should be more consistent returns, potentially, right? Either, you know, one or the other, either more consistent returns or ability to take on more risk is the other side. But the issue on the one with the, you know, like take on more risk is that there's a limit to how big you can get just from doing that. Oops, I need to shift it back over to here. This computer. There we go. Well, it looks like that they're gonna settle in this zone for now. So the liquidity holes that we created are still recent enough that those spots matter, right? But we got news in about 5 minutes, so might completely change the landscape, right? So who will watch this? If they were able to break out, like even if they were able to trade 09, 08, half 08 before the news, but especially if they broke the lows, that would be really significant if they were able to do that before the news. But I don't know if that's what's going to happen. I think that what's happening right now is that they're just thrashing all over the place inside of the liquidity hole. Like this huge hole that they've created now. Okay. Man, Ross Albright had 2 life sentences? For real? Okay, maybe, you know what? Maybe the reason that the crypto community likes him is because they think it's like a Kevin Mitnick situation where like they really threw the book at him and his punishment was too severe. How much more time we got? About a minute? Okay. Yeah, well, so I'm kind of, let's see here. What is the numbers that we're looking for? Sentiment final 73 spot 2, 5-year inflation 3.2, 1-year inflation 3.2. I wouldn't expect to see anything too big on the inflation numbers, to be honest with you. So those are right about where they should be. Sentiment 73 spot 2 versus a previous of 73 spot 2, and I actually kind of think that sentiment might decline a little bit. So that would be probably a buy, but I don't know if that's going to be like a significant buy. And then the real question is, okay, if it is a buy, does the sell meta order continue to come through, or does it shave? Okay, so it is lower, 71 spot 1 versus 73 spot 2. But the treasury market's not really reacting to it. Okay, 1-year inflation was 3.3 versus 3.2, so slightly higher than expected. Don't know if that matters. Existing home sales changes 2.2 versus 1.2. So it actually is maybe a little bit mixed, but the market's not reacting to it. So let's wait a second. Let's see if we continue to see that imbalance come through or not. Free shrugs. I think it's been cold in here long enough I can shut the window. Kind of makes me wonder if there's something else on the calendar that I'm missing. Like maybe Donald Trump is speaking today or something like that, or he's going to have a press conference. On Twitter, I got Brannigan Barrett saying that is not a misprint. US PMI drops, hard growth scare incoming. It wasn't that big of a it wasn't. It's 56 to 52 that's not that big of a drop. It is dangerously close to contraction though, ain't it? Okay. Oh, I liked that. I really liked that. So I put some orders at 11 and I got filled. And as soon as I got filled, you know, I put the offer out to take one tick off of it. And there was immediately like pushback and orders cleared 11.5. So I'm not really seeing signs of that sell meta order yet either, so. So now 12.5 is maybe one spot where we might have some trouble. But it probably would be relatively loose all the way up to the high. We'll see. At the moment, like we got 2 ticks up, I am kind of getting a little bit of a hint of that the flow is shifting towards the long side, but it's still, I would say, they're not really pushing super hard. And I do kind of wonder, or I'm kind of hoping that they do start to push those higher levels and we start to get like trap traders. Yeah, so the way that my bids are acting, I really like, because there are some points where they'll sell into it and try and take it down, but then that bid comes right back and you know, back over 1,000 and or iceberging. So I'm seeing some positive signs on the bid. And generally speaking, when we've been ticking up, those offers have been pulling. So it's just a tea leaf. Well, okay, those 2 ticks down, but they're not very good. 1649 though is probably okay. Yeah, I like it. Still like it. And you see on that uptick that the 1500 was there like right away. It'd be better. I mean, it's better if it's like 2000 or 3000, but in this situation, you'd expect like right there 500. Okay, 500 is about the amount that they're going to stack on a normal uptake. So if there's an uptake and there's more than that, that's kind of like, that's a little bit of a sign about which way they're going. Yeah, I really like that. Okay. So now there was a relatively big offer at 14, and it looks like most of those orders are canceling. So do you see what I mean now about, like, you kind of want to know what the resting liquidity was, but compared to the latent liquidity? So that might be a situation there at 14 where the resting liquidity was mostly a mirage and there's not a lot of latent liquidity there. It hasn't cleared the price yet, though, so we're not entirely sure. But I'm getting some immediate signs there that it's not as strong as we thought. It looks like some of that liquidity moved up to the 14.5 instead. I think probably at one of these spots there will be a good, like, it might take 4,000 to clear 14.5. Because usually the way that it goes is like it takes that much, but then at that point there's so many people buying through that it pushes through. That's what I would like to see, at least. You know, one of the things I like about this one, man, I shouldn't have opened up the window because my eyes are burning. There is something outside that I'm allergic to. And I don't really think that it's keeping me, like, look, I'm still sweating. The heck? Okay, so 36 to take 14. That's not as much as there. Oh, okay, and only 902 at 14.5. Okay, yeah, I think that should be good for a break. What was I going to say? Oh yeah, the thing I like about this trade is, like, you know, I feel like I've been having pretty good reads lately, and I've been doing pretty well. But part of it has also been that I'm taking on more risk. Like, I'm using more contracts. I'm in some instances taking some heat. In some instances, I'm letting it try and run a little bit more than I normally would. And so I kind of wonder, how much is it me just taking on risk? But in this situation, it never went to tick against me. I just caught a really, really good clean signal. You know, I kind of saw the possibility that I could market make that there was a good chance that there was going to go back and forth between 11 and 15. And it just so happens that right after I got filled, that I started getting pushback, like impulses, like, nope, we are going higher. So I think I don't think that this was because of risk taking. Maybe it was because of luck, though, right? I used to be like, you don't want to be making your money just from luck. Like, eventually that's going to run out, right? But I think I've changed my view on that. I think that it's better to be lucky. It's better to be lucky. And I think I've been getting pretty lucky. Actually, the more that I think about like my life overall, I'm pretty lucky. Hey, Hentlag, how you doing? Hentaglag. So that is new highs, by the way. So do you see now in this situation, there is more liquidity for them to push through, right? Once they push through there, now you're getting like 3,000s. And like 5,000 overall has traded at 15 already, right? So there is more liquidity past that high, but there's so many market orders that they're just plowing right through it. And by my math, if those guys that were going short before the news are truly trap traders, then we probably still have another net 5K to come through. So we're not, so I am kind of getting a little bit of a, okay, we could possibly take it off there. I guess I have 2 contracts and I could take 1 contract off there. But we're not to my target and cumulative delta yet. What about the spoos? The spoos are not happy. And they were kind of a little bit wishy-washy about it. It's only just recently started to turn down and be like, oh, maybe the PMI is a big deal. I gotcha. Still no change of your border colors to read the... No. I like the... I don't know if it really matters. I like the color. I mean, for you guys that come here every day, I think you know which one is which, right? Like you can tell just from reading the numbers which one is which. Well, I could create some sort of watermark, that displays over top of them, and there's definitely some room here, like, for me to say ZN, ZF, ZB, ES. There you go. I just draw them on there. Now they're always there. I'm going to cancel this buy order, by the way. There's no way that that's going to get filled. My opinion seems like a lot of effort here to jam those previous sellers if any of them were short. Oh, I don't know. I think that some of that probably was a little bit of panicking, Like, I think that there was guys that had short positions from earlier that were kind of like, crap. They were hoping, like, when it came back, they were hoping that, like, okay, there's still a chance that it could go lower, etc. Oh, it's still okay. And then, they kind of balanced at 11 for a little bit, which is where I got in. And when it started getting above that, they were like, shit. Right. I don't know. Does that help you understand which instrument is which? That's the question, right? Is which instrument is which? Sure. Okay. Only needs like you watch it one time and you'll know. Like, also for new viewers, yeah. You know, I was thinking about this last night, and I was like, you know, I think one of my problems is I have too many things that I think are important. Because like, if we go through like, here, actually, let's do it this way. Let's like make a new. Let's make a new little scratch pad. What are the channel themes? Channel themes. Markets are statistically efficient, but not informationally efficient. Current prices do not reflect all available information. Okay. 2. Actors in markets are what is the word? Boundedly rational. They want to optimize their utility, but aren't sophisticated. So they rely on heuristics. Okay. Number 2. Number 3, markets are competitive. Technical trading the market changes the market, making patterns, price patterns, let's say, price patterns unreliable. Price itself is unreliable. An analysis. Price alone is not very useful. How do I say this one? Inefficiencies. You know what? This should be higher up. Inefficiencies are created by the market microstructure. The very rules of the game. Retail traders are largely only looking at price, which is why their results are so poor. Funded trader programs are essentially carnival games designed to make money off traders losing. Bitcoin is not good for society. Okay, so when we come in here, market microstructure, we need to understand the structure of things, the microstructure. Before we try to change things. We can do this through agent-based modeling. There you go. Oh, can't save with no pass set. I didn't even, it was just kind of like automatic reflex save. Right. Okay, so those, is there anything else that I talk about all the time that, order flow, particularly the sign of market orders, is some of the best. Order flow, particularly the sign of market orders, is some of the best technical data available to retail traders. Right. So these are all of these different ideas that I've kind of like put out on the channel, right? That I talk about. And kind of the issue is that the way that we started was trading, and we still trade, and that's still a big part of what we do, right? And so we have this thing that's super important, that markets are statistically efficient but not informationally efficient. Current prices do not reflect all available information, that we want people to understand. And it's kind of like, well, yeah, but why? Why do we need to understand that? Well, I can tell you guys why, because then you get all of these things from it. But like, to understand why they're so important, I think that we end up getting into all of these other different parts, and then it becomes too diffuse. Then it becomes like somebody watching the channel probably doesn't necessarily understand that the most important thing that I'm trying to get across to people is that current prices do not reflect all available information. So the answer there is probably I need to focus it down, right? But then that also makes me think, well, maybe the fact that I have all of these different things actually means that actually isn't what the channel is about. That the channel is actually about Seth trying to find advantages for day trading. That's what the channel really is, right? So if that's what the channel really is, how do I keep that, because that's what we've built the channel off of, and still get across to everybody that markets are statistically efficient but not informationally efficient. That's my challenge. And then if I do go to the, okay, we're just going to prove this, how do I keep people interested in it? I know, maybe I should make more shorts. One thing that I've thought is that I should make more shorts that are like, here's all the stupid things that happened today, right? Okay, let me go back because there's some real questions here. Zibes, I just connected Jigsaw to NinjaTrader. Do your trades also appear on the DOM as well as the Ninja chart? Yes. My DOMs are not showing trades when I take them in Ninja. Do you pay for that? Yes, so I do pay for the live license. Probably shouldn't right now because I haven't been taking trades. but I do still pay for it, or I haven't been taking live trades rather. But I recall that if I took a trade on the DOM over here, that it would show up over here in Ninja. But I don't recall if it ever did it the other way around. It might be that it's just not able to do it the other way around. I don't know. It was never something that ever bothered me because I was like, yeah, I place all my trades over here anyways. I don't ever place a trade over in Ninja. Maybe you have a robot or something that's doing that would make it, you'd want to do that, right? But so I don't know what the deal is with that. If you'd like my opinion, what I guess people are interested, because we are all the same, could help the channel if you're interested because they don't know you. Do you think about that people saying that you're currently trading, that also stats about your trading on the screen, so it gets people interested in how you do things? Yeah. I mean, it's your channel, but the first information of live, yeah. Well, I mean, I agree with you, but I also think there's some problems with that, right? Is like, retail traders are primarily like, they want to come in and follow you and mirror your trades, thinking if I follow and learn from this guy, I'm going to become rich, right? And most people are kind of looking for like the easy thing. And you know, there's an issue with you know, okay, so this is another key theme that comes through here. We should rely on empirical evidence for our strategies, rather than social proof or past results or past profits. Right? So most people come in and they look for signs of social proof, and they look for signs of like your trading record, right? So their thought is, if I'm going to learn from somebody, I should go and find somebody that's been making tons of money and then go and copy what they do. And we've discussed all of the different problems with that, right? Like if you're looking at the person that's made the most money, then probably you're just looking at the most degenerate gambler, and they don't actually have any real good information about the market to teach you, which is why I always focus on the information about the market. Now part of that is that like we're trading super tiny, right? So if I put a number up there and it's like we made $10 today, I don't think most people are interested in that. You know what I mean? You know what I mean? Or if I put a number up there and it's, you know, the number, like right now I'm up, what, 256, 265 on this position? Probably should have taken, I probably need to size up a little bit, because really on a move like this, I would like to be up 1,000. But you know, then those are sim trades, right? So then I'm giving people an inaccurate, you know, I'd have to have some way of showing to them that's sim. And then they're gonna be like, oh, well, that's sim, you know? So I don't know if that actually helps, right? If I was coming through every day and I was making thousands of dollars with it, which could happen someday if we were able to size up and take risks, because we've been trading really well in the treasuries. Like I've been doing this well enough in the treasuries that like I would be willing to put like 5 to 10K in this and start doing what I've been doing here for real. I mean, like I've been taking trades down here, and I've taken trades in the 10-year that are like, you know, single contracts, but doing what I've been doing with managing multiple contracts and everything is a relatively new thing, and I feel like I'm getting to the point where I'm good enough at it that it would be practical for me to do live contracts if we were able to build the account large enough. Fortunately, I've been taking a lot of the money that we make from the stream and just putting it back into the stream, and costs have gone up, so I haven't been saving that, right? This trade is a sim trade, Sipes. This trade is a sim trade. I am on sim only because I lost my day job and I'm not really in a position to take on risk. So the accounts that we've got right now, we want those to last as long as possible. In the event that it takes me longer than we would like to find a new day job, and so we need that money that we've saved up to keep the stream going. So that's why I haven't been trading them live. Otherwise, I would totally have put in. This is another one where it's like, yeah, probably I do need to take at least one live trade a month, right? That helps me on the costs. But I probably should have taken this one in the 10. I don't think that this one is as good as the one that I took earlier in the week, though. Yeah, I don't care if you get liked by every person, but showing your account. But yeah, but you understand what I'm saying, where it's like number one, I'm skeptical that will actually attract more people. There's 3 parts to it. One, I'm skeptical that I can do that effectively and show it to you on the screen effectively. I'm skeptical that it will help, that it will actually bring people in. And I'm skeptical that if it does bring people in, that it will bring in the people that we want.
Block by.
Oh my, okay. I still do see a few trap traders, so that there could be another impulse up. That kind of does make me, this is kind of a little bit of a weird situation, because normally when we get an impulse like that, it would be over here, right? Not over here. So that's a little unusual. Well, it's definitely, I should definitely take one contract off, right? I have 2 contracts. I should definitely take one off, because there's like a big transaction, low resting liquidity. That's definitely something that can create a hole. Why not try it out? Yeah, there's no harm in trying it out. But where would we put it for as the next question? Okay, so like, one of the things is like early on we did this. But I had to like update it manually in order for it to be displayed on the screen in like a reasonable format and everything. Because the only thing that we really get on the Jigsaw side, where is it, by the way? Oh, I had 2 of these and one of them's gone. So we get this window, right? So I can show you this. Oops. Maybe this way? Yes. And do that. And I wish there was a way to like, oh, can you do the column chooser? Yeah, let's do that. Let's try this column chooser. Oh. Oh, hide this column. Okay. The instrument name, we can hide that. Hide this column. I think we can hide these things. I never use those. These bits right here, like the last ask, last bid, last price, I really like those. But like, I think that I can have like another tab that has all of that information in it, right? Yeah. Okay. So I can do it like that. So that means that I can get rid of these ones. And then how does this go? No, that's not it. Because you can change the size, the font size, can't you? Thought you could change the font size. That settings just changes the backgrounds. Fit all columns. Wish I could change the format of this because you don't necessarily need the whole date, you know. I just recognized on 720p I can't read your stuff. I don't know if it's on my PC only. I changed to higher. Yeah. So you have to have it to like set to the highest 1080p. Otherwise you get too much compression and the letters are the numbers are hard to read. But the numbers are kind of hard to read anyways. Like if I was really going to have a profit and loss that really is highlighted to y'all, it should be really gigantic, right? So I'm trying to figure out how to change. I could have sworn that there is a way to change the font size in here. Okay, sort group by columns. Like this doesn't need to be. I wish that it only showed me the time, or that the time was a separate column or something. All right. Let me just check right here real quick. Annual. You know, one of the things is that there's this column right here. Like, really, you want to know how much I'm making on a position. Like, it tells you right there, right? That's another thing is it's kind of been like, that I think is a better display of what you've made than down here, but. Yeah. I don't want the one contract off. We have moved like a tick or two higher, but it's a lot slower and it kind of seems like they're having to ramp them with a strong bid below it. So it still kind of seems like slow going. I think that I would just hold it, the remaining contract, until we end the session. Yeah, this is just not a good. See, this is where it's like, hey, you know, if this was my own platform, I would just make a little control that is like your total P&L and then just make it super big, right? Hey, Pete, you want to give me access to your repository and make a little change here? Now, there's another way. Oh, except for that won't show sim orders, so it'll only show live orders. So I don't know if that really helps either. You can say you could do it through Rhythmic. Right. So basically, the gist of it is that I can't make it huge for you. Now, I can do, so there is one other thing that I can do. You want to try and do the funky way? Okay, add Let's see here. Window capture. Ha. Hmm. I can't remember. Do I have to do filters on top of it? Like so. Oh, let's do 950. Oh, that's too much. Oh, actually, the top should be. There you go. Da, 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 da. Okay, can you see it now? Now wait, if I move the window, is it okay? Yeah, no, it's okay if I move the window. Even if I move it to a different screen? Even if I resize the window? If I resize the window, that screws it up. And even if it's behind other things? Ah, it's totally fine. Okay. Let's just change that a little bit. There you go. Granted, that's just the most recent position, right? Isn't it? Oh, so maybe that's not actually what you want. Maybe what you actually want is the one down at the bottom? The total? I get my DX version. Wait, what? The DX for? Oh, you mean like when we make the actual full platform? Okay. Let's change it. Hmm, 170. Uh, 110. Bottom 25. Top. Right. Oh, that's weird. Why is it? Oh, I see. Should be way more than that. It should be like 200 or something like that. Okay. Okay. Okay, so there's that. That's probably still relatively hard to read, huh? Hmm. Oh, okay, I know. You say it's no, it's good. I was gonna say I could limit it to just the total, right? I'm gonna make my thing bigger here to see the. Well, that's not bad for now. Leave it like that. Ooh, I love that I can put other stuff in front of it and it still shows up. Now I might have to mess with it each time that we open things up, right? Add the instrument column? No, I changed it to this is just the total for the day. So if I was trading multiple instruments, this would just show me what I had made over all of the different instruments. In order to like limit what we're looking at, and yeah, anyways. Looks like probably 16 is about the best we're gonna get before the end of this stream. You're thinking on the new viewers that will come in. We'll see. Like the thing is, so here's the thing: is that we get a decent number of people that come through, but it looks to me like what happens is most people just they'll come in and see like, is Seth doing anything interesting today? Okay, yes, no, whatever, and then deciding depending on what they see, they'll come or stay or go, right? And most of the new people don't stick around because they come in and they see, oh, this is super boring, right? So I don't know if having the numbers up helps retain, especially if most of the time it's like says 0. Unless, oh hey, actually, unless we come in here and we say not just today. What if we show everything from the beginning of January? Da 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 da. Oh yeah. Oh yeah. I am really impressed that I am up a net of 500 despite that really big loss. Yeah. I mean, I think that another thing that's really interesting about what we do is that the stream really, it kind of ends up being its own thing. Like with the way that YouTube treats it and all of that sort of stuff, like what we do on the stream and all of that can be different from what we do in the regular videos, right? Ooh, we're continuing through? Really? Surprising me again, guys. Wait, where are we on a volume profile? We're still not even over the overnight high at 19? Really? Huh. Well, that's very interesting. But is this really big enough to start canceling out some of these moves over here? I'm not so sure. Some reason the open doesn't update. It would if I had it open the whole time. So I can just do it like that, but then it still doesn't update. I don't know. That really rocketed out of there, man. I'm really pleasantly surprised. Okay, so there's a big order right there. I think that I could probably continue to hold it and see if this like turns into a trend day, possibly, but there's a big order right there. I'm going to take advantage of it because I've got only a few minutes left, so. That's pretty good. That was a pretty good winner. It was in it in an hour, for an hour, and it didn't look at the MAE was 1. And the MFE was 16. That was a good trade. But I digress. It doesn't really help me though with the problem, right? The problem that like we're not focused enough in our content. I kind of feel like that all of these other things kind of play back into markets are statistically efficient but not informationally efficient. But you get what I'm saying, right? Somebody coming through the channel, then you can pick all of that out. It's too much. Taking the hero. Ooh, you caught that at 19. Oh, right where I got out. Actually, that's not a bad one. It's not a bad one. Wait, are you taking it as like, oh, that's where Seth took his profit, so now I'm going to take the hero? I doubt that's what that, but it's been like that the last 2 or 3, hasn't it? It's been like that the last 2 or 3. Yep, there's my... It's time to get going, Seth. Oh, that's right. I have to watch kids today. But yesterday, I kind of got to the point where like I'd done the major things that was important to do. And I started going into Rust stuff. And I think, oh yeah, well, you know, you have, do you use NinjaTrader? Because if you want the indicators on NinjaTrader, you can come and you should talk to me about that. But you already have it though, don't you? You already have the indicators. Not for the, wait, really? Why not? They just not work? I'll have to go back and look. Maybe there's a... Because you did something late. You did do it recently, didn't you? I don't remember now. Oh, you're just not using it currently, I see. Okay. Yeah. But in the new view month again. Yeah, well, if you had the end, because I'm thought you had a full license, it should still work when you come back or whatever. But if it doesn't, then you should let me know, because all licenses, oh, actually everything coming through here, yeah, they're all good, unless you were just using the demo. Okay, that's okay. Because I wanted to make it so that, you know, like, because we increased the price. And I was like, well, I really want to make sure that everybody that's been here on the stream for a long time, that they have the chance to get in. So, you know, I can work something out for you. But we are, for the, you know, people that come in afterwards, we are trying to increase, or how do we say it? We are trying to, we had to increase the price so that we can pay for marketing. ZN is moving like NQ today. Okay, it's not that dramatic, but it is moving, isn't it? This by the way, I hope you took a profit on that Octave. Oh, he took -3. Oh man. But it was so good at the first. But it came back really fast. I am really curious about this. Like, what shouldn't the CPI and some of the other numbers that we got earlier in the month, shouldn't that have been enough for people to be like, oh, like we are actually having growth problems? Why is it that the S&P PMIs now are the thing that convinces them that like things are slowing down and unwinding their positions? Or maybe it just has something to do with it being Friday. Because if I go back here, let's kind of review the trade a little bit before I go, okay? I essentially got in right here. I got in here and I took 19.5. So I got out here. I got out here. And I took one contract around this area. Took off one contract there. Okay, so we entered in here. When we got through to it, I was like, this is pretty good, but I think there's still some trap traders. So I was kind of expecting this thing, right? But it has continued through. So this stuff, that can't be trapped traders. So now at that point, we have to consider there is a large meta order at work, possibly just, you know, a bunch of people acting together as though they're like an institution, because they were all on the wrong side of the market or whatever the deal is, continuing to push this up, right? And so if that is the case, then my question is, why was it about this particular one that made them be like, oh, now is the time for me to give up on this, right? Instead of like last week or whatever. when the viewers change again, okay. Well, it goes back to there's like okay. Here's the other thing. I was going to say, and I didn't say this, right? But because I'm being too ADHD. I think that the number of viewers that we have at any given time is mostly a function of the YouTube algorithm. And for some reason, the YouTube algorithm has decided that we aren't it. So, like, the retention isn't good enough. And if it's because of the retention, I don't know if putting the profit and loss up there is actually going to help the retention, unfortunately. Yeah, Japan hacked rights. The Japanese yen has been on a tear through most of this too, so it could be due to that. Also, on that latest little jump, really saw gold take a hit. Really see it take a hit. You could, come on, you can do it. Yeah, it's just I feel that if the channel really has a greater lasting success, that it's going to come from the individual videos. Is I guess the real thing, right? And that's where I was like, well, I have really good individual videos and I really like the entirety of the work, but I'm not sure that it's actually accomplishing my greatest goal, which is to help the world understand that markets are statistically efficient, but not informationally efficient. Come on. But maybe what I can do there is I can just start making a lot of shorts on TikTok and YouTube and have them all be just about that. Relax. People like to learn how people are. And yeah, maybe you're right, hand lag. Maybe you're right. Maybe there's not really anything major we need to change. Got some. I do have a little bit of a like, I need to do something because. Yeah. Before I go here, I think that we should. Here, I'm going to do something. I'm going to duplicate this. And then I'm going to do some text. Well, that's too much. So maybe we just keep it CN. Oh, not background, opacity. Oh, here we go. Color.
Block cell.
Clock cell. Ah, now that's interesting. Oh, that's not right at all. There we go. Because I mean, it is a question that people ask. Like, what am I looking at? The issue with this one that I'm doing right here is that most people don't know what these mean, what those symbols mean. There, how's that look? Yeah, at least they show up so that they can ask. Yeah, it's true. And maybe instead of putting them over there, I should put them like that. I don't know if that's better or not, but we're like 30% and make the outline bigger. Something like that. Don't forget your children. Yeah, they haven't woken up yet, but I do need to go and get them. And wake them up. Okay, so then when we go back to this, on main 2, let's get rid of that bit too. There we go. Okay. This time shift. I also kind of wonder how we would track this. I guess we're just gonna do this for a week, and we'll see if the number of live stream. Let's see here. What does it show us actually? So there is like the live stream views overall, right? Usually we get to like 100. For some reason, I don't know what the deal was, but on January 9th, we had a ton of people. Was that when we had that? No, that wasn't the... Oh, maybe it was. Maybe that was the South Korea thing. I think that was the South Korea thing. But, you know, most days it's between 150 and maybe 300 sometimes. So we would see a general increase, I guess. A general increase in the live stream views. Oh no, this day was the South Korea one. I don't know what happened on the 8th that we got so many views. Maybe I didn't even notice. That's kind of weird. Thursday, January 9th. Yeah, I don't remember. So weird. It's also kind of weird to me that we're already 24th of January. Okay, but it would go up, I guess. But maybe it's not that. Maybe the average view duration goes up instead. Maybe that's actually the metric that we want to look at. But that's where I'm saying I don't know if just having those things up there is enough to make the average view duration go up, right? I think for the average view duration to go up, Seth has to be more interesting. Right? And then there's the other side of it, which is maybe the number of views that we get is actually a function of the impressions click-through rate, which means Seth needs a better thumbnail and or titles. So, yeah. Well, we'll wait and see how that goes. We should at the very least see people comment on it and be like, oh, what's that? What's that about? I am interested. Well, I think I'm interesting, but the subjects that we're talking about isn't always interesting to everybody. We do have to understand that, because that's kind of like our key challenge. Or rather on the main goal, right? The main goal, the most important thing to me, is that the world understands that markets are statistically efficient but not informationally efficient, and current prices do not reflect all available information. And everything else should be kind of trying to feed into that. Oh, Trump is speaking. Anyways, what was I saying? Yeah. So what do we do to help that? What do we do to help that? Well, growing overall helps. Yes. And maybe their approach to this is do the thing that gets you the biggest, which would basically, without breaking the law or anything, because I do think that there is like some people will put things on thumbnails and stuff and give people inaccurate impressions of results. That's another thing, is that I could do something like, because there's sim and live, you know, and I kind of want people do need to understand if it's Simmer Live. Maybe we can fix that later. Let's just see how it goes with the way that I have it right now. But again, I'm being ADHD. Yeah, I need to, I think that the thing that's going to help the most is get another day job, start saving that up and putting it into, you know, get us a little bit larger of an account so that we can take those big risks, and then take big risks and make big money off of big risks. That's what I think is gonna. That's what people want to see, actually. Right? Okay, I'm gonna get going. I will see you guys next week. Remember, there is a Federal Reserve meeting next week, so might be quite at the beginning of the week, but it's gonna get. I think that we'll get some big moves after the Federal, especially if he comes back and he's like, actually, we're concerned about growth now. Then rates are really gonna move, right? Okay, stay